What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to reflect on my buys that I made yesterday. And again, right now, I'm throwing in $250 a week and then throwing $125 a week into my IRA. The dividend snowball effect is really kicking in. It's looking very good. And by the way, I'm monetized on Instagram. I'm going to be very active on Instagram. So at Darth Dividend. That's the real me. So I'm going to be very active on X at Darth Dividend 23. Just be aware of that now. So I would love for you to watch both my posts and like all my posts that you see on X and Instagram and on YouTube. So these buys have done pretty well. And I've earned some passive income. Today, I'll go over that as well. But again, I'm buying some of the dividend growth stocks. I like the hybrid of income stocks or high yield dividend stocks and dividend growth stocks. I believe a hybrid is perfect. This is my philosophy. Of course, I'm not giving financial advice, but this is my philosophy for obtaining a really good, almost like a retirement pension. And it's done through both income stocks and dividend growth stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividend stock buys right now. So looking at the Dividendo manifesto, and again, a lot of you guys are new. I kind of gave a little bit of humor because, I myself am an Ohio State fan, and I will be going to the Ohio State-Michigan game this year. Hopefully they'll pay them back. But Connor Stallions had the manifesto. I kind of added a little bit of humor, so I have the Dividendo manifesto. The dividends manifest my passive income journey. So I made a total of $17,694.03 in dividends. My money weighted rate of return 99.03%. My market gain is $7,177.72. So that is looking pretty good right now. So we're going to go over my buys, and I'm going to show you what I earned with 2306. So I earned $22.95 with MPLX. So that's a high yielder. I'll actually go over it a little bit. Then I earned $26.92 with PFC, which was nice. And again, I threw $250 in, so this little nice $26.92 was added to the $250. So again, you see my TSLY, NVDY, CONY, and FBY, $1,018, boom, right there. Got me 16 buys. Now, look what I got. So we got Nike. So 37.68. So that's like we're almost at half a share, 0.41 shares. Then we got Medtronic, 0.18 shares. Target, 818, 0.05 shares. McDonald's, 981, 0.03 shares. Altria, we got 0.36 shares. Rexford Industrial Realty, 1896. I made almost half a share with that. Or I mean, I paid for or almost got half a share. Procter & Gamble, I got 0.11 shares. Fidelity National Financial, I got half a share. That was 26.25. Chevron, 1441, I got 0.08 shares. Comcast, I got 0.43 shares. Hershey, I got 0.04 shares. Mondelez International, 0.24 shares. Microsoft, 0.03 shares. Kimberly-Clark, I got 0.16 shares. Philip Morris, I got 0.16 shares. And Citigroup, I got 0.17 shares. So I want to just go over, again, my portfolio, my holdings. I'm going to reflect on this. So let's see. There's a few things that, again, Premier Financial, I'm almost at 100 shares. Okay, that's nice. I'm at 86.85 shares. Another thing I'm looking at is, where are we at with MPLX? I don't have a lot of shares with them, I don't think. Got to be up there somewhere. So looking, okay, I'm at 26 shares. That's not too bad with passive income. Again, being an income investor, and I feel bad for my accountant because they're the ones doing all the K1s, and MPLX is a K1. But I want to go over MPLX a little bit. So MPLX is sitting at 40.45. The average volume is 2.17 million. The market cap is 41.11 billion US dollars. Its year range is 33.12 to 42.90. Day range is 39.84 to 41.29. Previous close was 41.19. So MPLX, I love these guys. They're a high income, high yield dividend stock. So we're going to go over a little bit on them. They're like a big pipeline stock. Again, I want to go over revenue trends and dividend history. So that's what we're going to look at right now. So I'm on Google right now. So a few things I want to go over. So June 2023, the revenue, this is quarterly financials, 2.54 billion, net income 933 million, diluted earnings per share 0.91, net profit margin 36.66%. September revenue was down 15.96%. It was at 2.75 billion. December, it was at 2.8 billion. It was up 11.23%. Net income 1.13 billion. It was at 38.97%. Diluted earnings per share 1.1. It was up 41.03%. Net profit margin 40.44%. That was up 24.93%. Now March, I want to go over this. This is nice. Revenue 2.69 billion. It was up 4.27%. Net income was at 1 billion. It was at 6.57%. Diluted earnings per share 0.98. That was up 7.69%. Net profit margin 37.37%. It was at 2.22%. Operating income 1.09 billion. The cost of revenue 1.14 billion. That was all the arrows trend upward. I'm going to show you their revenue trends as well. And they have a lot of subsidiaries. So that's one thing that's nice. Their parent organization is Marathon Petroleum Corporation. So nice thing is they're founded in 2012 and their headquarters are in Findlay, Ohio, which is nice. Now let me go over the revenue trends and dividend history. So this is annually in millions US dollars. I'm going to start in 2014, 793, 2015, 1,101, 2016, 3,029, 2017, 3,867, 2018, 7,005. That was a huge jump. 2019, 9,041. 2020, I'm going to blame the pandemic a little bit, 7,569. 2021, 10,027. 2022, 11,613. 2023, 11,281. Still a huge jump from 2014 to 2023. That's pretty significant. Now I'm going to jump to the dividend history. Again, for a high yielder, this is pretty nice. I'm on Zacks.com. So the previous site I was on was Macro Trends, and I always use Google as a reference. So 2013, 18 cents, 27 cents, and then 29 cents, 30 cents, 31 cents in 2014, 33 cents, 34 cents, 38 cents, 2015, 41 cents, 2015, 44. So it jumped up to, let's just go to 2019, it was 68 cents. So was it 18 cents in 2013 to, let's just say 2020, 69 cents. It was a little stagnant. You can see the pandemic right here probably playing a part. It was stuck at 69 cents, and then you have, looks like a special dividend at 128, and then it jumped to 71 cents in 2022, and then in 2023, 78 cents, and then in 2024, 85 cents. So you're going to see a high payout ratio with a lot of these companies. So just be aware, they could do a dividend cut with a high payout ratio. Their payout sits currently at 88% of its earnings. So again, revenue's up, everything's good, but you have to be aware of the risk because it's a high yielder. So with investing in high yielding dividend stocks, there can be a risk of a dividend cut. So you have to be aware of your risk. That's why I like a hybrid. Now, I'm not going to expect this dividend growth to overpower some of these other dividend stocks like Kroger. Kroger is eventually going to catch up to them. I'm just telling you right now, with its dividend growth a lot higher, a lot more efficient, MPLX could be on the back burner when it comes to dividends, because eventually dividend growth always wins. I'm going to tell you in the long run, excellent dividend growth stocks, dividends always win. Now with MPLX, the number of dividend increases in the last 5 years is six. Dividend growth in 5 years is 4.73%. So if you bought one share, you made $340 with an 8.25% dividend yield. So that'd be great if it was, higher than 85 cents, but it's still pretty nice for its price. So I'm going to continue to own it and buy more shares. If there's a dividend cut, who knows what I'll do with it. I can't confirm if it's a buy and hold forever stock for me. The one negative, like I said before, is the K1s. So you have to file K1s for that. It's not fun. That's why I have an accountant do it for me. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you Friday. So you're going to start getting more consistent videos. So literally now I got all this stuff out of the way, and I'm having other people deal with these issues with this scam that happened with me. So now I can put more time into my YouTube channel, and I can put more time in social media. So make sure you follow me on Instagram at Darth Dividend, and on Twitter or X at Darth Dividend 23. I will see you guys Friday, and if you'll be seeing me make posts. So please, if you want me to review a dividend stock, I want you to comment either on Instagram or on X. Okay? I want you to do that on there. Make sure you like my posts. You guys take care and have a good Tuesday, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So make sure you do your due diligence when you make purchases, and realize you can lose all that money too. So the other thing is, it is best to seek financial advice from a financial advisor. So if you're seeking financial advice, go to a financial advisor, or if you're seeking tax advice, go to a tax advisor. My YouTube channel, again, is for entertainment purposes only. This is my dividend investing journey, very transparent with what I do. You don't have to buy stocks because I buy them. I just give you entertainment for them. So you guys take care and have a good one.